Good evening to everyone who have joined the earnings call for the period ended September 30th, 2020. Now I'd like to introduce the members of the management who are present for the call. Along with me, I have Mr. Vinod Kumar, Managing Director and CEO, and Mr. Venkatraman GS, Chief Financial Officer of the company. I would like to start the conference call by going through the safe harbor clause. Certain statements in this call concerning our future growth prospects are forward-looking statements which involve a number of risks and uncertainties that could cause actual results to differ materially from those in such forward-looking statements. The risks and uncertainties relating to these statements include but not limited to fluctuations in earnings, our ability to successfully integrate acquisitions, competitions in our areas of business, client concentration, liability for damages in our contracts, withdrawal of tax incentives, political instability, unauthorized use of intellectual property, and general economic conditions affecting our industry. So with this, now I hand over the call to Mr. Vinod Kumar to take it forward. Thank you.
Thank you, Krishnakant. Good evening, everyone. Wonderful to have you all in the call today, and hope that you and your family are safe and in sound health. We continue to be in a challenging period with COVID infections rate going up again in several geographies that we operate. It's very satisfying for me to inform you that at this point, all Subexians are sound and safe. About 25 Subexians in various geographies were tested positive for COVID. Most have completely recovered, and the rest are at their homes and getting better. Now, despite the challenges, we had a good second quarter in terms of our financial performance. The revenue for FY21 quarter 2 was at rupees 933 million as against rupees 857 million of Q2 of last year, which translates to a growth of about 9%. Our EBITDA increased by 23% and ended at 254 million as against 207 million during the same period. Our profit after tax was at rupees 123 million as against rupees 63 million in quarter 2 of FY20. The capital reduction exercise that we embarked post the approval of our board and shareholders have also been completed with the relisting of our shares with face value of rupees 5 last week. It was a very elaborate and complex process, and we are very glad that we have been able to complete it ahead of the timeline that we had originally estimated. From an operations perspective, bulk of our teams are working remotely. The managed services and the support operations are progressing quite well. However, on the project delivery, we are seeing delays on account of challenges of remote working with customer teams, particularly when we have to integrate with multiple systems within customer environment. As you can appreciate, project deliveries used to happen with a substantial on-site presence, and in many customer environment, we do not have the detailed documentation of internal processes and systems. So getting all these things remotely is time-consuming and contributing to the overall delays in project deliveries. It will take a while for both sides to get accustomed to the new mode of working. We are making progress, but definitely, there's a lot more effort and challenges in getting this done on a remote basis. On the business acquisition front, we are seeing telcos tightening their purse, particularly after the end of last quarter, and postponing some of the projects, particularly, again, more specific in North American and European markets. The priorities from our customers seem to be streamlining their existing operations to adjust to the remote working of both their teams and even their customers. So overall, there is also an effort to look at cost reduction, and towards this, they are exploring rationalization of multiple systems and things like that. However, the long-term investment and exploration on 5G IoT are progressing, albeit with some reduced speed, but I guess that they have retained their commitment. Most of the telcos have retained their commitment to some of these investments as a long-term basis, obviously with some reprioritization based on the supply chain and some of their cash flow considerations. On the IoT/OT security side, we are seeing resumption of some of the discussions that has been tied up earlier this year. I mean, I'm talking about after the March, we had a lot of these projects put on hold because they were on other priorities. The factories were on shut and whatnot. So most of those, the good thing is that most of those discussions have started resuming. Now we are closely monitoring the situation and making necessary adjustments to our operating plans, aligning with where the customer is spending, and also making the changes wherever the delivery model demands that. Our focus continues to be on the digital trust. As some of you would have seen, we have augmented our management bandwidth by bringing in Suresh Chintada as our new CTO, and he will spearhead the effort to enhance our digital trust portfolio. To start with, we are establishing a digital trust lab, and this lab will look at new technologies like post-quantum cryptography, homomorphic encryption, which will be key technologies and very relevant in the coming days when we talk about security. And also there are trust-based technologies like blockchain, which is again something which we have already started working on, but we wanted to really fast-track that under the ambit of this lab. The idea here is to work with a lot more partners, academia, and customers to look at use cases that are relevant for the emerging digital world, with specific focus on a wider 5G and IoT adoption. Now, this remote working is going to be a part of the new normal, and towards this, we are taking adequate steps in training, knowledge management, and data security to fully embrace this change. We believe that even post this pandemic, some of the advantages that we have with respect to work from home, it is good to sustain it. It is not going to be like what we are today with complete work from home, but it would be a kind of a mixed model, and therefore how to enable that is something which we are looking at. We have started working ahead of it, and to look at what are some of the changes that need to happen in the system side, in the training side, and on the IT side, so that we can completely embrace that. We will also be increasing our investments in the training of Subexians. We have already undertaken that, and we're continuing that, and as we believe that will be necessary to navigate and grow our company out of it. As you can appreciate, the lack of socializing and challenges of virtual collaboration is quite tiring. We are trying our best to engage the teams and keep the spirits high. I'm sincerely hoping that we can see the end of pandemic soon and get our teams together and also be in front of our customers. And yesterday, the news about the vaccine is quite encouraging, and hopefully by Q4 we could at least have a better interaction with the customers, at least to start visiting them. Today, most of the customers, even if we are willing to visit, most of them do not entertain them because of the considerations and some of the policies they have. So we are hoping that the Q1 of next year, some of these things will relax, and also because of the renewed confidence, they will start aggressively looking at some of the projects which have taken a backseat because of some of these adjustments they are doing to their operating plan. So till then, we have to be agile and manage the situation as it evolves. That's what we are doing currently. So the continued support of our shareholders means a lot to us, and we thank you for all the confidence that you have reposed in us. Thank you very much, and probably we can take some questions now.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. The first question is from the line of Amit Mishra, an individual investor. Please go ahead.
Hello, can you hear me now?
Yes.
Yeah, hi. Firstly, congratulations to whole management team on completion of share capital reduction. Good set of numbers and business momentum as we have seen in Q2 presentation and recent press releases. So I have 3 questions here. Firstly, it relates to the recent deals which we came to know through press releases which I mentioned earlier. So can you take us through them, the one with Telefonica and Tech Mahindra? Specifically, I'm looking for nature and size of deals we are looking at. Also, when these deals can fructify in terms of revenue recognition. My understanding with Tech Mahindra deal is like you are going to put Subex layer in their products with telcos around the world. So is it something going to be bundled automatically in their product, or Tech Mahindra needs to pitch this additional layer to its client before it getting implemented? So that's my first question.
Okay, should I? Let me answer that. I thought that you have 3 questions, so let me first answer that question. So thank you. Now this deal is on a partnership that we have signed with Tech Mahindra. I'll first cover that and then go to Telefonica. Now we have decided to cooperate in the area of blockchain. We have identified a specific use cases around blockchain that sits well with our digital trust. In the digital trust domain, these are areas with respect to the settlement, with respect to some of the fraud management related aspects. And these are the 2 areas where we will be participating to start with these use cases. Of course, Tech Mahindra has got a platform, and we would be covering use cases around the digital trust areas with our blockchain solutions. Now, how will be taken to the market? We are jointly taking that solutions to the market, and we are quite bullish about it. Obviously, these are new areas where the customers are kind of embracing as they move into the new, particularly when they start moving into the enterprise side of business. I'm talking about telco customers. That is where we are hoping that most of this engagement will translate into revenue. So I'm not able to give you a size of the deal, etc. at this point in time, but we are very, very happy with the progress that we are making, with the integration that we are doing with their platforms, and how we have agreed to jointly take that to the market. The story is slightly different when it comes to Telefonica. Telefonica, the engagement is specific to IoT security, where we have been selected as their partner to provide IoT security to their customers. So they have created a security offering. They have a large security business under the ambit of Telefonica Tech. They do close to $1 billion business around Telefonica Tech, and they did not have an IoT specific security practice, so they created that practice underpinning our portfolio, our solution, our technology. And they have started carrying that to the market. So both these things are strategic in nature, and we expect that in the months to come, we will have some joint successes that we can talk about it.
Great. Can I ask my second question? Hello.
Yeah, go ahead.
Yeah, so the new areas that we discussed during your opening speech, Vinod, it's something that we discussed before as well in previous engagements. Can you please throw some light on these labs, on some progress in this area, and how much company is investing in this, and employees, total number of employees working for these labs?
Okay.
That's my second question. If you want, I can...
Go ahead and ask the third question too, Amit, then I can take that together.
So yeah, on this share capital reduction, that's massive for all of shareholders of the company, and we have been waiting patiently for last 3-4 years, because that has been a big commitment from company, but it never realized all that, all the time. So besides the stated objectives in the presentations, like share capital being commensurate to the business size, increase in key ratios, and allowing company to pay dividends to shareholders, what is the next step because we still have, large number of shares, 56 crores, and it's quite big number for a company of our size. So that's my third question. If you can reflect on that, we have good cash balance. If you are considering buyback or something like that.
Okay. So first on the Digital Trust Lab. So I think this is a completely new thing which we have thought through now, and probably you are confusing that with the AI labs that we have been having for quite a while. Now AI labs is, that's an integral part of our operations for quite a while. We sort of give a lot of emphasis to it, and that is providing a lot of cutting edge capabilities to our products. So that's what we probably in the past calls that I'm talking about. The Digital Trust Lab is something which we are setting up as we talk now. We are just putting our plans together. And this is primarily looking forward on new technologies and things like that. So this is something new. So that's we will elaborate as we come up with more. We have better. We have completely thought through that. At this point in time, we are looking at. We have a CTO. This is getting incubated under CTO's organization. Coming back to the second part of the question, I think that we have right-sized the capital, etc. Our current focus is to look at how we can invest around some of our new areas, because as you can appreciate that this year has been quite a tough one for us, as some of the things that we want to do on the market side for some of these new products we could not do it because of the particular situation. So the company's focus will be to look at the new green shoots and look at how we can support that fully based on our ability to do that much more than what we used to do before. So that's our priority with respect to, of course, with this capital reduction and this let's say balance sheet restructuring that we have done. We do have an ability to look at other options, but that is not something which we have considered at this point in time. And as and when the timing is right, we will reflect on that. And once the board takes a decision, we will let you know. But our current focus solely is on looking at all the new areas that we have identified and how to support them and how to support them with all that is required, capital, talent, technology, partnerships, so that we can take that to the next stage. That's our focus, Amit.
Yeah, fully understand. Thanks a lot for answering all the questions. I have few questions on numbers, but I will queue up for others too.
Thank you. I appreciate that.
Thanks. Thank you. Thanks.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference call, please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Sanjay from Alpha Line Wealth Advisors. Please go ahead.
Yeah. Good afternoon, gentlemen. Congratulations of good numbers and wish you good health too, sir. So my 2 questions are, the first was related to the blockchain new partnership we have done with Tech Mahindra, where we are very bullish. Can you elaborate? Have we done any testing on that, or how capable we are to do that, or is still in an incubation stage at our Digital Trust Lab?
Okay, so we have been working on this blockchain-based on some of the specific use cases that mentioned in the earlier answer to the call on the fraud and partner management for quite a while. We have done a few POCs with our customers. We do not have any deployment as yet, but we have done POCs with a tier 1 customer. So to that extent, we are in a MVP stage, a minimum viable product stage. And what we intend to do is that we would want to take this now aggressively with this partnership to our customers, broaden the base, because as you can appreciate that Tech Mahindra would be looking at a much wider spectrum than the narrow spectrum of digital trust that we are looking. But this is not this is not in the incubation stage. It is at the MVP stage. A minimum viable product has been created, and if today a customer wants to do a POC, we are in a position to do a POC or a pilot. So that's the stage where we are at on the blockchain. Specifically on the use cases. Under the ambit of the Digital Trust Labs, what we are trying to do is that we are taking more use cases because, we are focused on 2 use cases now, settlement and fraud, but there are several use cases around this whole area of digital trust which we can put use of this technology, and those are the things that we will explore under this ambit of this Digital Trust Lab.
That's great, yes. So my second question is, we have addition in our CSP portfolio, that is Partner Ecosystem Management. Can you elaborate on that? What are we doing there and what is the opportunity lying that side?
Okay. So the Partner Ecosystem Management is a solution that will help our telco customers to start with. It can be extended to other vertical also, but any, let's say, enterprise like a telco customer to manage their set of partners. As you can appreciate, already with the 4G, there is a lot of partners the telcos work with. So if you look at any of the customers in the Indian context, any of our operators, they are now bundling and giving Netflix, Amazon Prime and whatnot, right? So these are all partners. There are large partners, there are small partners, there are content integrators, plenty of them. Now, if you move into the 5G scenario, they will have the addition of partners would be in the tune of, times. I mean, we are talking about 10 to 20 times at a minimum to start with the partners is going to add. So they need a robust system to manage these partners end to end. That is starting with credit vetting the partners, onboarding the partners, and creating the ability for partners to co-create portfolio together. So they need a system to do all these things, and which is non-existent for the telco space at this point in time. So we have been working in the space of interconnect billing for a long time, and that's a natural transition for us to scale up from whatever we have been doing and look at this overall aspect of partner management, which will be very, very critical for telcos and many other partners. We are starting with telcos, but this will be applicable to any organization that has got a lot of partners to manage with, starting with onboarding, creation of portfolio, management of the portfolio, settlement at the end of the thing, cash flow, the payment management, onboarding, offboarding, all of them. We are creating a platform, and that's what the partner management is. So we are quite bullish and quite excited with the progress that we are making there.
That's great, sir. Good luck to you. I'll come back in a queue for more questions and wish you a happy Diwali to all of you.
Thank you.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, thanks for the opportunity and congratulations, Vinod and Venki. That's a fantastic set of numbers. Just wanted to know what's the pipeline looking like for the Horizon 2 products?
Okay. So thank you, Rajesh. See, with respect to the Horizon 2 and Horizon 2 products, as I've told you during the last call, it was quite kind of a difficult period the first 2 quarters, particularly on account of most of the projects have been put on hold because all the new projects have been put on hold by the customers, not just telcos but even industries and things like that. We have started seeing resumption of that. Some of the things that we have been selected and has been put on hold, some of the things which they had an RFP put on hold. We are seeing slowly things started, that those engagements sort of coming back, Rajesh. So we believe that during the course of this quarter, some of those engagements should move forward, and we should be able to probably come back to you with some good details around some of the specific progress, or let's say the deployment that we are doing during the course of this quarter, Rajesh. So quite encouraging to see the re-engagement from some of these customers who have put their projects on hold with the advent of COVID in the March-April timeframe, Rajesh.
I see. Venky, just a housekeeping question. So our goodwill of, I think 34 crores or thereabouts, that's going to be now static, or will that get further reduced given the capital reduction exercise?
No, say that again. Sorry, I missed that part. What 34 crores were it?
Sorry, not 34 crores, but the goodwill that we are showing on the books, 344 crores, that will now remain same, or because of this capital reduction, this will go down further. I don't know whether your capital reduction process got completed by September 30th or not, so that's why I was just trying to understand.
That's been completed. So the accounting entries for the capital reduction have been through the September quarter. So there's no further change. So the goodwill which you're seeing will remain, and that anyway, since we had taken that impairment in December, so that is a reflection of what we see the goodwill as, given our current projections for the business.
Okay, got it. Thank you. That's all I have.
Thank you. The next question is from the line of Amish Kanani from JM Financial Services. Please go ahead.
Hi, sir. Congrats on a relatively good set of numbers. Sir, two questions from my side. One is, so we understand that in Q1 you had alluded to some savings, that happened, because of which there was a good, despite a slightly lower revenue, we had a good EBITDA margin. So this quarter, there is some decline there vis-a-vis QOQ in the margin terms. The question is, sir, and I understand that Q4 for us is a relatively big quarter given some licensing income that we get. So I just wanted to understand from cost perspective, how are the costs moving, and in that context, how should we look at second half margin? I know we don't guide, but directionally, how should we look at?
Okay. So Amish, I think from a cost perspective, you see one big cost item which has not been there in the current year, both quarters Q1 and Q2 is travel. Because travel is a reasonable component of our spends, and given COVID, obviously the travel spends are not happening. So that has obviously helped us. If you compare between QOQ, I think between last quarter and this quarter, because we have had a forex loss. Last quarter we had a forex gain of about 1.89 crores at a console level, versus we have a loss of 4.38 crores this time. So that's why there is a movement at operating margin level, and that is primarily because of the movement between GBP dollar and rupee dollar. So that has led to the margins coming down a little bit. But apart from that, operationally our costs have been in line, and we have not had any major changes. And as for the rest of the year, as you rightly mentioned, we don't guide from a margin perspective, but we don't see any significant changes to our cost structure. But yes, there will be increments which will kick in the second half of the year, because given the general uptick in demand for good people, we will need to give increments for people. So therefore, to that extent, there could be increase in our costs. But apart from that, the operation costs, we don't see any significant changes.
Okay. And we can expect that Q4 seasonal upturn in terms of licensing income that we should continue to assume to be in the trend line.
No, so that is a function of the deals we close, right? So typically the license revenue which we book is a function of deals we closed in that quarter or the previous quarter, and the kind of contracts we have with customers, because some of them are such contracts where the whole implementation is linked to multiple deliverables. In such cases, then the license revenue also gets recognized over the duration of the contract. There are some where there are very specific deliverables which we can deliver to the customer, which helps us in recognizing the license revenue upfront. So it's difficult to call it out right now. While historically we have had better fourth quarters, as you rightly mentioned, but to me to call it out now will be difficult, because it's a function of the kind of deals we close and how those contracts are structured.
Okay. And second question, sir, I wanted to understand the taxation part. I saw two items on the tax. So we don't pay tax probably because we used to take a the goodwill write-off, but we have these withholding taxes plus deferred tax. So how do we and as a result, we have both the tax put together. We pay 40-45%, at least we provide for, of course, I would say, on the tax side. So if you can just help us understand, what are these two items, and having written off the goodwill, are we changing those things, and how should we look at the tax rate in future? Thanks.
Yeah. So I think the tax numbers which you see here, particularly withholding, is a function of the because as you know, Subex operates in almost 90 countries. We have provide services to customers in 90 different countries, and many of these countries we don't necessarily have a operating company in each of these countries because it's anyway not really required. So in geographies where we don't have a physical presence, in those countries, each of these customers deduct withholding taxes based on the regulations in the specific countries. So therefore, that the withholding tax line item which you see is deductions made by customers for payments which they make to us from these geographies. So that will so that is the cost of doing business in these countries, because the cost of setting up an entity and then running that will be even more expensive for us. So that's one aspect. So far as the deferred tax line item, if you see, that's it's, as you already said, it's not a cash charge. It's a function of the mismatch between my tax books and the benefits which we will get over a period of time because of the restructuring which we did 3 years ago. Because we have these LLP structures where there are tax benefits available to us. So that mismatch has to be in line. So therefore, we have these deferred tax liabilities which we have created. So given the structure which we have, this will continue. It is unless we do something significantly with our structure. So this line items you will continue to see going forward as well.
Okay. Thanks.
Yeah.
Thank you. The next question is from the line of Kranti Baitini from Wealth Mills Securities. Please go ahead.
Hi. Congratulations for the good set of numbers. Just want to know, your India is a very key significant market for the telecom business. But whereas if we see the geography-wise revenue with respect to Subex is concerned, it's not improving. Is any specific reason, and also what are the plans to improve the business domestically?
Okay. Look, traditionally, if you look at our product, our portfolio, we cater primarily to the telecom operators, the major telecom operators, and we provide them solutions on specific areas. If you look at the Indian market, most of the operators are our customers for our range of products. And once we have our products, the way we have our business is that we have an ongoing business on supporting them. That is the annual maintenance, and then the change request and the upgrade and things like that. If you look at the world over, I mean, definitely whenever there is a new opportunity there, as a new operator coming on board, we have had that increase in this thing. We are seeing on the other end there are consolidation happening. We do not expect that margin of Indian business as a percentage of our overall business to go up in the short term, because most of the activities around 5G and some of the enterprise movement are happening in the Western geographies, and that's where we are focused for some of our new products. But we expect that the amount of business to remain particularly stable. Obviously, when, let us say, the 5G gets rolled out and things like that, there will be an opportunity for us to go back to our products. So it's not that we are not focused on this market, but the opportunities for us on some of these new areas are presenting much more in other geographies like Europe and EMEA as a whole, and North America and those regions.
Okay. How do you foresee the opportunities with respect to India, because so much of talk goes with respect to Jio and the other telecom operators, and India is one of the key markets in terms of the telecom lines, or you can say telecom size is concerned.
So that might be from a number of customers' perspective, that might be, but I guess that, as I told you, we have already provided our solutions to them, and the next wave will happen when there is a technology change that happens, or we come with a new product. Like, for example, once the Indian operator starts exploring the enterprise business, then definitely that will be an opportunity for us to go and sell our new products. So I guess that when the 5G and those things gets rolled out, that is when probably we will have more business coming out from the Indian market. Indian operators, let me put it that way. But otherwise, for our current thing, the revenue will remain at the current levels.
Okay, thank you.
Thank you. We would request participants to please limit your questions to 2 per participant. For any further questions, you may come back for a follow-up. The next question is from the line of Ramesh Kaspekar from an investor. Please go ahead.
Yeah. Good afternoon, Mr. Vinod Kumar and your team. Congratulations on a good set of numbers.
Thank you.
Now, basically, when I'm an accountant, so I don't understand much of the IT strategy and the technicalities and the details which you explained. But basically, when I look at your numbers, it looks to me that your turnover or the income has gone up by about 18 crores in 6 months' time, and EBITDA has gone up by about 25 crores. This is as a result of contraction in expenses by 15 crores in other expenses, which if you net off with your employee cost increase of 5 crores, gives you a net expense reduction of 10 crores. The balance, I would like to know, out of that turnover of 18 crore increase, is it pricing power or is it new businesses? What I mean by new businesses is new clients, new products, and things like that. Or it is just pricing power to the existing customers. You have a monopoly once, you sign up for a security contract, people can't just go away, as I understand. So is it, how much of this is pricing power and how much of it is the new products or new businesses?
So there is no pricing power that we have. It doesn't exist in the market. We play in very mature markets. That being said, once we are in a customer, we will be there at least for 10 to 15 years because it's not that easy for us to swap a customer to swap us off because we are very well integrated on that. So the revenue increase that happens is primarily because we are providing more services. Either we've signed more projects or more new projects to new customers, and it's primarily new business, more except from existing customers or new customers. That's a mix of that. I would say that about 75% of our business comes from our existing customers, new business from our existing customers, and about 20-25% will be on new logos put together. The cost, as Venki clarified, this year we had because of the COVID, the travel line item of the expense have been very low, and that is coming into the numbers. But otherwise, from a cost, have primarily more or less be in line with what we normally have.
Yeah, thank you. The other question is, you have add up of about 100 numbers in headcount, which in this quarter has resulted maybe in 5 crore extra increase. And annualized, should result into maybe 13 to 14 crore increase. Now, is this for new products and new businesses, or is it for sustaining the existing operation?
So it is for it's a mixture. We have added some delivery capacity. If you see our numbers, also the delivery component of our business is going up, and therefore we increased the capacity, our delivery capacity, we increased it to drive more revenue. So that's point number one. There's some part of it has gone into new areas, the new initiatives. And we have also onboarded a few freshers so that, on an ongoing basis, we take them, we train them, and that is probably will be used to, let's say, backfill some of the attrition that we have during the year. So it's a combination of that. So you're right in the sense that we have increased the delivery capacity to drive more revenue. Yeah.
So ideally should result into a better business.
That's correct, yeah.
Okay. Thank you.
Thank you.
Yeah, thanks.
The next question is from the line of Deepak Sukhani, an individual investor. Please go ahead.
Hello, sir. We saw that you have pretty decent cash balance of around 140 crores, which is going to increase every quarter. So what's the plan and the strategy to utilize that? I mean, as one of the gentlemen asked, will there be any planned buyback? Will you start giving dividends? Are you planning for any acquisitions? Because I believe by the end of the year, this 140 will become 200 and will keep going up. So what's the management plan regarding that?
Yeah, so as I clarified on that, our current focus is on growth, and we will use the capital for fueling growth. All options are being explored. Obviously, as you can appreciate, we have held back on some of the investments because of the market situation that we are in. We are slowly bringing those investments up in the new areas, and we are also looking at primarily from when we look at digital trust, and for us to plug the holes in the digital trust portfolio or augmented things, we are also looking at what is the right technology partnership that we should do. So primarily, our current focus is to use those capital to drive our growth. No other decisions have been taken at this point in time. Not other considerations have been done, because we've just completed the whole restructuring exercise. And as I said, our current focus is in a singular focus of driving revenue with all the resources that we have.
Thank you.
Thank you. The next question is from the line of Shreyas from Dura Technologies. Please go ahead.
Good evening, everyone. Sir, could you explain to us what are your main earnings from various geographies, and the revenues going forward Q3 and Q4? Will there be any variation compared to Q1 and Q2?
Venki, can you provide that? We have already provided that in the investor thing.
If you look at our geography mix, I think we have shared that in our investor deck as well. So I think that mix is not going to dramatically change in the rest of the year. So if you see, we have about 70 to 20% of our revenues coming in from Europe, and we have a large share of our revenues coming from the Asia Pacific geography. So I think the revenue mix is not going to dramatically change by geography.
Okay. And in terms of revenue compared to Q1 and Q2, will the numbers be almost the same, or is there any chance of increase to Q3 and Q4 going forward?
So we don't give a specific guidance on our future quarters, as you know. So I think obviously the idea is that we will do all that it takes for to drive revenue growth going forward in Q3 and Q4. But we don't share a specific guidance number, so I will not be able to give you any further insights on that.
Thank you. We take the next question from the line of Hemish Shah from Yes Bank. Please go ahead.
Hello. Yeah, so what is your hedging policy is what I wanted to know, because there's it puts a lot of strain on the, so there's a lot of volatility in the bottom line when you have, on a 85 crores of revenue, if you even have 5 crores or 4 crores of profit or loss, that will make the bottom line look very volatile.
No, so we do hedge currently. So I think right now we are hedging about 20-25% of our net exposure as we speak. But some of the volatility you are seeing is on the balance sheet items which we need to revalue end of the quarter. And since we also have subsidiaries outside of India, like in UK, where the reporting currency is GBP, and they also have other currency exposures. So some of these exchange gains and losses come through because of that. So while we recognize the need for hedging, and we do that, so while that is addressed partly, but some of the losses you are seeing is also a function of the movement in the different currencies in the various operating subsidiaries which we have.
Okay. And one question was that, so we have 140 crores of cash, and as you said, you want to deploy the cash for growth purpose. So are we looking at any inorganic opportunities? Like, have you spotted any inorganic opportunities?
Yeah, so we continue to evaluate a number of opportunities, so that is ongoing. Obviously, we will be in a position to make announcements as we get to a point where something is concluded. But yes, there are a number of opportunities we are evaluating on an ongoing basis.
Okay, so thanks.
Thank you. The next question is from the line of Amit Mishra, an individual investor. Please go ahead.
Yeah, hi, Vinod. Me again. Just wanted to understand on what's the progress related to patent. I think there was a patent outstanding method and system for revenue maximization in a communication network. Is it true already, or it's still under progress?
Yeah, So we had indicated that we have filed for two. Both of them are in progress, and obviously it will take a while. It is going through the process, Amit. So it will take a while. We have filed both of them, and it's going through the process.
What's the cycle like? Means how long it takes normally? Of course, they have to do the due diligence, but
Yes, the patent filings are fairly long, Amit. So because depending on which geographies you filed them in, say if you do it in the US or Europe, some of them can take as long as 5-6 years. So, so it is a fairly slow and long process. But the fact that your patent application has been accepted itself is a good first step. But then it goes through their process before they clear it.
Okay. Thanks. That's it for now. Thank you.
Thank you. The next question is from the line of Chetan Ladha, an individual investor. Please go ahead.
Yeah. Hi, Vinod. Congratulations on the numbers. The question is more towards the product side from my side. So the thing is, we are talking about all these products, like we are taking it to the market. Some of them are in the POC stage. So as a business or from your team, has there been some assessment on the risk mitigation front, in the sense you definitely must be having some of the competitors, and considering these are very disruptive technologies, who are also on speed to develop similar kind of products and taking it to the market with a bigger execution capability. So what are the mitigation steps, or what is the plan of action and some competitors that we have thought of, or have we thought of in that in those terms, with taking the product, with having more adoption towards the products that we are proposing as a POC or taking it to the market?
Yeah. So, look, depending upon which product that we are talking about, we have been very conscious about how we can create a moat or a differentiator based on our current capability. So if you look at the identity management or ID Central product that we have created, now there we are taking the advantage that we have access to operators in 90 countries. So that's an advantage that probably some of the others will find it difficult. There might be others trying to solve this problem, but they might be not having this advantage. So in every product that we are trying to do, that's a conscious effort for us to look at creating a moat for our offering. That being said, it's too early days, and that's a hypothesis at this point in time that these things will work. As we get into the market and the product market fit is sort of established, and that is when we start fueling the investments to scale that up. The only thing that has passed that stage at this point in time is the IoT security, where, as you know, that we have gone through detailed evaluation on a global basis, and our technology has been selected based on some of the clear differentiation and the modes that we have built. Those also, we are, as I told you, we are working with a hypothesis, and as soon as the product market fit is sort of established, we will invest behind that. So on it, others are working, but we have our own strengths which we are building on this matter.
Okay, perfect. Thanks so much, Vinod, for the clarification. The second question is in terms of the travel. As I understand that the travel on-site is resumed with respect to the other companies when we read about their results and their commentary. So is it that for Subex we have a complete hold based upon an internal policy for travel on-site, or is it completely zero and we have not even started sending resources on-site?
At this point in time, the resources are not on the site. It is not just an internal thing. We have not resumed travel in general. We are making some travels here and there. But people sending on the site, it is something which our customers are not, also our telco customers are not completely open at this point in time. So they are not enabled most of our travel. so it will have to wait till then. Some of the cases where some of the critical managed services resources which have been on the on-site, that has sort of resumed. Some of them, for example, in some of the Middle East countries, they have resumed because they have been living there for a while. They kind of exited and they were going back and living there. But for the delivery projects, which used to happen, for short stints that you have to be in the site for 3 or 6 months delivery, those things have not resumed. Most of them are happening from remotely at this point in time, not just because of our consideration. From the customers have also not opened up that avenue for us now.
Perfect. That answers it. Thank you, Vinod, and thanks everyone from the management team for good results. Thank you.
Thank you. The next question is from the line of Bharat from Manthan Research. Please go ahead.
Yeah, congratulations on good set of numbers. I have 2 questions. First, on the order book. I didn't get the order book number from either presentation or the press release as well. Could you just tell me what was the order book as in Q2 ending?
Look, I think we have started changing the order book and how we are reporting it based on some of the feedbacks that we have done. So we have not made any specific report to that. Our order book for this first half year is in line with what we had last year. So it is around 15. This is orders that have come in during this H1. It's not the total backlog of revenue, just to clarify that. So I will be confusing if I give you that, but if you both the details, but we will bring it into our investor presentations in an appropriate time. But our order book was in the range of 15 million H1.
Right. Okay. And second question I had on this balance sheet. There's one contingent liability from tax demand that you talk about in the annual report. Could you throw some light on it?
Yeah, so if you see our contingent liabilities, if you compare our contingent liabilities between March 20 and March 19, that number has come down significantly. I think, so these are all income tax related cases which are at different stages of appeal and at various stages of appeal with income tax departments. And in all of them, we are reasonably confident that we have a good case. Just that because these have not been finally closed, these cases have been not finally closed, and either we would have won it and the department would have gone to the higher court for further appeal. So it is at different stages. So therefore, these are reported as contingent liabilities. Wherever we have got favorable orders, we were able to bring that number down. So we almost reduced it by almost 120 crores between March 19 and March 20, and we'll continue to track it. So we are comfortable with all the positions we have taken on those cases. That's why they are appearing as contingent liabilities and not as provisions in our financials.
But do you plan to settle it using the Vivad Se Vishwas scheme, or you plan to?
Yeah, they don't make sense it doesn't make sense for us to avail the Vivad Se Vishwas scheme in these cases because it will be unfavorable to the company. That's why we have chosen not to use it. Wherever it was required, we have done that. There are some smaller cases which we thought it made sense, and we have done that. But for the ones which are seen as part of the contingent liability appearing end of March 20, we have not chosen to use that.
Thank you. We take the next question from the line of Rajkumar Roja, an individual investor. Please go ahead.
So my question is, Subex Assurance operates in mature market with limited growth prospects. Sir, when will Subex Digital overtake and or show respectable sales figure against Subex Assurance? This is question number 1. Now my next question is, in one of the previous con call, you had said Subex is the product company and the services are around the product. Now, and you also said that it should 5 to 30%, whereas in our case, the growth is somewhere below, either 10% or below. I can understand because of the previous balance sheet problem that we had. Now your present outlook on the present situation. Thank you.
Okay. Thank you for the question. So on our Subex Digital is where we are housing all the new initiatives. New initiatives, as I had detailed in one of the earlier questions, we are continued on a path, particularly on the security, IoT security side, things were looking quite promising, and it has come to a complete grand halt when the COVID set in because we were trying to address some of the sectors which got badly affected. So the things have started happening. Now, when will it overtake? It will be quite a while, but at least we believe that in the next few quarters, we would be able to come to all of you with some significant wins that we have had, which is strategic in nature. Also bear in mind that the revenue model there is very different. It's a subscription-based model, which means that it will take time for the ramp-up to happen, but probably you, based on the kind of contracts and some of the volumes, you can probably understand the strength of some of those contracts. So that is a completely different type of business, so apple-to-apple comparison may not be possible. On the overall growth kind of thing, as we said, we are going through a very difficult period, and I think probably most of our customers are, putting off the new projects on hold or very, very careful in going how they are going about it. At this point in time, our focus is to ensure that, two things, manage the revenue and expenses on our core areas to how much of our extent possible based on the realities that we face the ground, while at the same time push forward with the digital trust story. We believe that we are on the right path based on the interest that we have been able to generate from both some customers and also from the strategic partners, and that's how we will grow that. So for the H2 to really show some let's say overcome or let's say come to the level of assurance thing, it will be a while, but we hope that in the next few quarters we should be able to, you'll be able to see the numbers from those things contributing to a decent percentage of our overall revenue.
Thank you. We take the next question from the line of Dinesh Kabra from Seven Hill Investments. Please go ahead. Dinesh Kabra from Seven Hill Investments, your line is unmuted. Please unmute the line from your side and go ahead.
Can you hear me?
Yes, we can. Thank you.
Yeah. Vinod, I somewhere read that Deloitte's 2019 blockchain survey referred that 83% of the large companies see a strong case for a blockchain solution. Now, Subex, does the tie-up which they have done with Tech Mahindra, does it refer to only telecom or other industries as well?
It is predominantly focused on the telecom side. That is where we are focused on with that partnership.
Thank you. We take the next question from the line of Meet, an investor. Please go ahead.
Hi. I just wanted to understand if there is any kind of provisioning that is going to take place for H2 for any deferrals that are expected from many clients, and because of this, the revenue is expected to fall down. That something of the sort is expected, or the payments as per the order book is expected and is expected to fall as expected.
So I think our size of the business in H2 right now is fairly small given our current mix of revenues. If you look at almost 97% of our revenues is coming from the core, which is H1. So H2 revenues are extremely small, and we don't anticipate any such need to provide or any additional provisions to be made for those revenues or payments. So there's no such expectation or need.
Thank you. We take the next question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, hi. Can you give a little bit more color on the progress we have made on the digital trust product side?
So Rajesh, I think if you look at the digital trust, right? Digital trust is a set of portfolio, and we see the digital trust in three coming together in three layers. Now, the fundamental layer is one of risk management, and this is what, if you look at, we have been focused on the last 2 decades around providing that. So fundamental layer of this digital trust is the risk management layer. Now come to the next layer is the one of security and identity. Now, these are the mandatory ones or the ones that are required for a sustainable sustenance of any business. So here we have, if you look at 2 products that we have products, one is around the security side. On the identity side, we are creating a product on ID Central, and we have more thoughts on coming with, expanding that to other areas. So that's the second layer. The third layer is the one which provides a strategic element, things like, brand, real-time insights, predictability, customer experience. So some of these things which are relevant comes as the strategic layer or the third layer. So if you look at, Rajesh, our current portfolio, we have products across all these 3 layers, and depending upon the verticals that we operate, there would be slices that are applicable for us. So if you look, let me take one case of a telecom side, telecom, which is probably our strongest vertical today. So if you look at telecom, we have a comprehensive solution covering all the 3 areas. So risk management, you know that today we have an end-to-end risk management in a telco environment, which we can offer that. Security, we have an IoT security that we are working with them. ID Central, we have already started working with telcos to onboard them and create value. If you look at the strategic layer, all of our analytics, our capacity, the capacity management solution, some of the things that we are doing on the crunch metrics, all of them are providing the strategic element of it. So we have a complete thing. Similarly, we are creating teams for each of the verticals around this and all these 3 layers and taking that to the market, Rajesh. So the story is sort of coming together, and I'm also very, very glad to say that we are also seeing the market traction coming in. There are more consultants and analysts talking about digital trust as an important thing. We are seeing some, pretty soon you will see some of the large, vendors taking a position on this matter. So this whole area is getting quite strong, and we are also trying to build on whatever we have and try to figure out what adjacent things that we can cover so that we can sort of improve the holistic nature of our solutions around this whole digital trust, Rajesh.
Thank you. We take the next question from the line of Amit Mishra, an individual investor. Please go ahead.
Sustenance and competition. I was just going through previous phone calls, and we trust more on our leverage, the access to data we have with our telco partners around the world. Just wanted to understand how far we can leverage it, given the privacy terms and conditions Subex might have in the contract with these telcos. And like, for example, if a particular telco closes a contract or goes out of business or something, what happens to the data? Does access to that data? Does it cease to, you're not allowed to leverage it in your products, or how does it?
Okay, so just to clarify that point again, please realize that we have access to our data. We don't own the data. Telcos currently, are the data custodians. They also, in many geographies, they don't own it, but they are the data custodians. The advantage that we have is that most of the data is within our systems, even though it is a custodian of the data is telcos. We have access, easy access, right? Now, if you look at any telcos, are very, very, very large and very complicated setup, and even if they want to have the interfaces to get all the data, is a very difficult process, and that we already have solved it. So our proposition today is that if we get the customer consent for doing various analysis, we will only do it with customer consent. That we are very clear. So once we get the customer consent to look at his data, then we look at the data after getting, let's say, the telcos into the picture. We are not doing anything without the knowledge of anyone. We have a clear understanding with the telco that if we get the customer concern, we look at the data and we create some intelligence out of that, and we provide to entities like service providers, insurance, banks, internet companies, etc., to solve a particular problem. So, for example, let me give an example that will drive home the issue. Now, let's take an example that the banks want to send an OTP to all of us, right? We all get OTP. And let us say that bank has got a process. There's a lot of fraud that happens, and bank wants to say that before they send an OTP for certain kind of transactions. For example, you're looking for a password, change of password, and they want, before you give that password, that OTP to that person, you want to do a check whether the person is in which location, and whether the person has changed the mobile phone for a certain time and things like that. So these are some of the things that would want to do. And as a customer, you would want those things to be done. So these are the automatic checks that I just gave an example of this. So if I'm traveling to UK and I've requested for a change in my password, bank password, they will quickly find out, they can quickly look at our system, and if we have everything in shape, they can find that, okay, this particular gentleman has gone to UK and requesting a password reset. So they will take a different workflow rather than sending a let's say, a password to you. They will call you up and they will do some verification, ensure that you are indeed the person before sending the OTP. So this is just a use case. There are hundreds of use cases around this whole identity, because the whole problem is that with the whole digitization, you do not know what is the verification of the other, who is the person or the entity on the other end. So the challenge is that how do you ensure that the entity that you are talking on the other end is indeed the true entity? And that's the whole idea of this identity analytics that we are talking about. So we are taking consent of the consumer to do this analysis because there is value for him, because he gets better benefit if the service provider knows that. So it's a value-based play, and everybody gains with the whole thing. It's a platform that we are creating. Potential is huge. Of course, the challenges are huge. We have to convince a lot of people, etc. So that's the story. So it's not that we are dependent on telcos. Telcos is just one source of data. We are also linked up with many other sources of data. And all this data is coming together to do some analytics, identity analytics to solve specific problems.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for closing comments.
Okay. So we thank you all for taking time for attending this call and your continued interest in Subex. Let me also take this opportunity to wish you and your family a very happy Diwali. Stay safe, and let's hope for a very bright and happy times. Thank you once again, and take care.